You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is September 15th, 2021. Well, hey, all the troubles of the world, the economic house of cards is crumbling all over the place. Don't believe us? Take a look around you. China, the US, Europe, all over. And here to talk about it is our good friend Rob Kirby, KirbyAnalytics.com. Rob, it's great to have you back on the show.
Pleasure to be with you again, Kerry. And what a world we live in.
Yeah, what's the biggest trend that's captured your attention right now? The biggest goings on, the biggest events. Where are you focused right now?
To me, the biggest and most underreported issue that's occurring currently is the volume of trade that we are witnessing in terms of dollar turnover in the cryptoverse. And to explain that, that's the headline. But to explain it a little bit, Kerry, we are currently on an average daily basis. So any 24-hour period, the cryptoverse is turning over a minimum of $100 billion equivalent per day. So I like playing with numbers. So if we take a minimum of 100 billion in any 24-hour period, and if we gross that number up to get to an annual number, 100 billion a day turns into let's just say over 3 trillion a month. And 3 trillion a month, when you annualize that, gives you 36 trillion a year. And let's just say that in the last 3 or 4 months, the average daily turnover, while it's had a low point of 100 billion in turnover in a day, on a good day, it's 180 billion. Average is probably 150 billion. So that means we're probably looking at 50 trillion turnover in crypto, in dollar equivalent, in crypto per year currently. So my way of thinking is that if you have $50 trillion worth of turnover annualized in the cryptoverse, I like to suggest that cryptos are eating off the dollar's plate. And when I say that, what I'm specifically saying is that cryptos are categorically and emphatically being used in trade settlement right now. And we have seen anecdotal supporting evidence to suggest that that's true, that the dollar is not capturing as much in international trade as it used to. And to evidence this, I would point you to the notion that Venezuela and Iran have been cut off from the SWIFT system, which is the mechanism by which dollar settlement is accomplished for countries selling oil. Because historically, and under the petrodollar system, oil trades were settled in nothing but US dollars, because that was all part of the secret arrangement, or not so secret arrangement, that Henry Kissinger made back in 1971 with the Saudi Arabians, that they would only price their crude oil in dollars, and the global oil trade was all dollar. Well, let's just say that's changed. Much of it because of the globalist interests that control the US dollar. They kicked Venezuela and Iran out of being able to settle in dollars because they excluded them from SWIFT. And SWIFT is SWIFT. It's a global trade settlement mechanism. And with that being done, countries like Iran and Venezuela and their chief buyer being China, who needs energy and is buying most of their energy, if not all, they had to have a workaround where they could continue to trade without settling in dollars. And what have we seen in addition to that in the last couple of weeks, in the immediate aftermath of the fall of Afghanistan to the Taliban? We saw the fall of Afghanistan on a Monday, and it was Tuesday, the day after, the Saudi Arabians announced a new defense pact with Russia as their new protector. And then on the heels of that, America withdrew their Patriot missiles and their most advanced defensive capabilities from Saudi Arabia. And that clears the way for Saudi Arabia to sell their oil in any currency they wish to in the world. This, you see, what we're talking about, the underpinnings of the petrodollar have now been removed. And de facto, the volume of crypto that's already trading is telling me that cryptocurrencies are being used in trade settlement right now. And the crypto portion of international trade settlement, in my view, is only going to grow from here, which means that the dollar's relevance in international trade will decline, and dollars that are currently held in foreign reserve accounts the world over, these dollars will find their way, or will try to find their way, back home to America to buy up anything tangible that they can get. And that spells hyperinflation to me, and a dramatic reduction in the purchasing power of the existing dollar stock. And sadly, and in spite of all this, America continues to issue record amounts of new debt. And the amounts that they admit to being created are actually much smaller than the amounts that are actually being created. And to evidence that, I point you to the work of Catherine Fitz and Dr. Mark Skidmore. Dr. Mark Skidmore, who occupies a very prestigious chair in economics. He's a PhD economist in public finance at Michigan State University with his PhD research staff. And the work that Dr. Skidmore has been doing suggests that there is many, many trillions more money being created than what is admitted, or reflected by, for instance, the growth of the Fed's balance sheet, which in the latest year has gone from roughly $3.5 trillion to $8.2 trillion. And it's also evidenced by the amount of repo that's being this whole repo issue. To put it in lay terms for listeners, when you hear very, very inflated or large numbers of repo being done on a daily basis in the U.S. Treasury market, what repo really stands for is unwanted U.S. government securities. And the Fed doesn't want to put them on their balance sheet because they don't want to add another $1 trillion to their balance sheet and look like a banana central bank, like, for instance, maybe the Zimbabwean central bank. So the repo market, and that being said, there's also no natural foreign buyer, because foreign buyers want to get rid of dollars, because trade settlement, the whole nature of trade settlement is changing. The nature of trade settlement is that less and less dollars are being used to settle international accounts. So countries don't want to take on more dollars or dollar obligations. And as a result, there are more and more U.S. government securities that don't have a natural home, and they have to get caught up in this repo facility. And to put people's head, or to allow people to wrap their head around it, let's just say last year at this time, the average amount of daily repo was probably 100 to 125 billion a day. And currently we're running at a steady pace of well over $1 trillion daily. And that's at least $1 trillion worth of U.S. government securities on a daily basis that aren't wanted anywhere.
And 5 basis points for them. Right?
Well, it's just crazy. I mean, we're talking about ridiculous amounts of money. And then one has to ask themselves, well, if nobody wants this, what's really happening underneath the water? I mean, we've all seen pictures of ducks gliding seemingly effortlessly across a smooth pond. But if you ever look at an underwater picture of this seemingly graceful movement of a duck across a smooth pond, you will generally see their little webbed feet paddling furiously underneath the seemingly very calm waters. And monetary authorities in the Western world are indeed, if their effortless management of our current money supply is to be believed, you can bet that under the surface, it's probably a picture of sheer panic and pandemonium, because they don't have homes, natural homes, for the amount of debt being created. I mean, we have inflation being reported at extravagantly low levels, 2%. I mean, actually, Canadian CPI data was released this morning. Our Canadian CPI rate was reported at an annualized rate of 4.1%, highest rate in 18 years in Canada. And we have a 10-year bond in Canada yielding 1.2. So one must ask the question, exactly who in the world wants to buy government debt that yields 1.2 for 10 years when the current inflation rate, which is very, very likely underreported, but it's being reported at 4.1. So just do the math. You know, you invest in a piece of paper that yields 1.2, and your investment is locked in at a 280 basis point loss in the first year alone.
That's pretty
shocking.
Think about that. That's pretty shocking.
Think about
that. Well, according to one noted inflationist commentary we all know and love, John Williams, the actual inflation rate, that means you have to define that. That means the rate of loss in purchasing power of the U.S. dollar within the country is at 14%. And we haven't seen anything like that really since World War II.
Yeah, and a 10-year U.S. government bond, just for reference sake, I believe it's currently yielding around 1.28. So with an inflation rate, a real inflation rate of 14%, holding U.S. government securities that yield for 10 years that yield 1.28, you are basically locking in a loss on your money of, let's just say, greater than 12%.
Most of it over 10 years, you'll wind up with, if it continues at that, yeah, you wind up with zero, which means no sane investor is buying it. There's only, remember Harry Brown, the economist, he used to call government the accommodating loser, because when it came to currency risk, when it came to loan guarantees, everything else, when no sane investor would go in there, the government would go in and take the loss.
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, you see, in the Western world, we have rules and let's just say bylaws that are placed on pension funds, where monies that are held in trust for retirement purposes, for certain percentages of investable assets have to be held in sovereign AAA rated bonds. And what that means, typical asset allocation models for pension funds are usually run what's called a 60-40 basis,
right?
Where a risky fund would have 60% of their investable assets in equity and 40% in fixed income or equivalent. A more conservative fund historically would have up to 60% of their investable assets in fixed income and 40% in equity. And so what happens when you have 40% of your investable asset pool earning a negative 12% yield, when you have to, especially if you're running a defined benefit pension plan, where the payout to recipients is not gauged by the return of the investment pool, but instead is set in arbitrary terms. So defined benefit versus defined contribution. Defined contribution benefit plans are much easier to manage than defined benefit, because defined contribution means that whatever the investment pool is, the proceeds are split up between the recipients. Defined benefit is way different in that the payout is guaranteed, or supposedly guaranteed, until the fund goes bust. And so what that means is, if you have a substantial portion of your investable assets with a big negative yield, the portion that is invested in other than fixed income must work much harder and pay much bigger returns to compensate for the loss in the negative rate on the fixed income side. And what that does is it forces pension funds down the risk curve to take much riskier bets in the hopes of making much greater returns. And what that does is it increases the probability and likelihood for a pension fund to blow up and make a bad investment where they lose it all.
Oh, yeah. Yeah, well, everybody is going into riskier investments here because they know that there is no bond component of their portfolio, of your portfolio, that can ever wind up providing you enough money. They just can't do it. So the risk is out of control. And the sad thing is, a lot of people just don't even know what they're risking. They have no comprehension whatsoever of their inherent risk. And
absolutely
really bad. So cryptos, is Bitcoin the primary beneficiary, or are we talking Ethereum, and that's why Ethereum is rising and perhaps will eventually eclipse Bitcoin?
Whether or not, to me, it's a bit of a mug's game, Kerry, whether Bitcoin is better than or lesser than Ethereum. I view Bitcoin as Bitcoin to me is the killer of banks. Bitcoin is a store of value. And as Bitcoin is the killer of banks, I view Ethereum as the killer of the law practice. And because what Ethereum embodies is smart contracts, and smart contracts basically untangle very complicated legal proceedings and basically eliminates the onerous need for lawyers to decipher or to determine what good value is in a business transaction. So Bitcoin is a challenge to the bankers, and Ethereum to me is a challenge to the lawyers and the legal minds in the world, and because Bitcoin basically removes the requirement and the need for banks, and Ethereum, by and large, reduces the public dependence on the law profession. So I think both are needed, and we need smart contracts and we need store of value. And what I really don't understand, and I really have little time for, there are a lot of zealots in the world who say that it's either one or the other, and that they can't coexist together. But to me, that's as ridiculous as saying that we should have had a world with one fiat currency. There shouldn't be a euro. There should never have been a German mark. There should have never been an Italian lira. There should have never been a Russian ruble. And I call that hogwash, because different jurisdictions with different customs need their own currency. And I do believe that there is a place in the world for smart contracts, as well as the traditional store of value, which is more to the more to the advantage of Bitcoin in terms of store of value. But in my view, there's a place for both in the world, and I just don't see eye to eye with people who believe that that we need to have a world of all Bitcoin or all Ethereum, or one versus the other is the way of the world and the way it has to be. I just don't buy it.
Yeah, well, that's why you want flexibility, right? You want the ability to have systems evolve over time that are best suited for wherever it is in the world, whatever type of business is being transacted.
Oh, they serve, Kerry, they serve two different functions. It's sort of like saying, we shouldn't have ships, we should just have trains, or we should just have trucks. No, you need to move things efficiently, to move goods efficiently through our economy, we need what's referred to as intermodal transport. We need to transport on water, we need to transport over land, and we need to have bulk carry as well as, smaller increments to carry. Like, you can't ship 30,000 tons of iron ore on a truck effectively. You need a ship to do that. You can't, you don't necessarily want to rent, a cruise ship to take 6 people across a body of water, because a cruise ship is more efficient to move thousands of people at a time. But it seems to me that the people that say that the world will operate best, or the cryptoverse will only succeed if there's only Bitcoin or there's only Ethereum, is ridiculous.
Yeah.
They serve two different functions.
Yeah, absolutely. All right. Well, Rob, we will leave it at that. So make sure you go over to kirbyanalytics.com. We always love having you on the show, Rob, getting the real scoop on what is going on here, rather than the party line, which we know all about that, how you know what that's all about. And hey, it sounds like it's going to get really interesting going ahead, so you better be ready. If you got a question for Rob, why don't you shoot me an email, and the address is kl@kerrylutz.com. And don't forget to sign up for a free newsletter. Rob, it's always a pleasure, and we will talk to you again real soon.
Great talking to you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.